We researched the infamous gold standard. Some important people that have influenced the gold standard are FDR and Richard Nixon. FDR in 1933 recalled all gold and gave citizens back their dollar amount of gold. President Nixon announced that dollars held by foreign countries would no longer be exchangeable for gold. The International Gold Exchange Standard that had existed since 1933 was over. Also, some key icons associated with the gold standard are the Fed, Fort Knox, and greenbacks.
Now for a little history. The start of the gold rush and the increase in general public market made countries call for a standardized way of processing transactions. When the gold standard went into effect in the mid-1800s, it increased the sense of trust in the system of paper money. The gold standard was so popular, almost every country had put it into effect. However, during World War I, most countries killed the gold standard and started printing loads of money for the cost of war, creating hyperinflation. Realizing their mistake, countries resurrected the gold standard and modified it. The gold standard was once again killed by the Great Depression, only to be resurrected once more by the start of World War II, this time by fewer countries. However, the link to gold created an immense amount of inflation and stagflation on the US dollar, and in 1973, the link between the dollar and gold was officially broken, starting a period of economic growth and low inflation for most countries.
Some pros of the gold standard were that gold retains a value that has been recognized across the globe throughout history. Gold has real value due to its beauty, usefulness, and scarcity. Historically, the United States has had lower levels of inflation when on a gold standard. Also, returning to a gold standard would reduce the U.S. trade deficit and would restrict the ability of the federal government to increase the national debt. Finally, a gold standard puts limits on government power by restricting its ability to print money at will. Some cons of the gold standard are that the value of gold fluctuates widely and would not provide the price stability necessary for a healthy economy. Also, the gold standard caused many financial panics, bank failures, and prolonged the Great Depression, and would limit the ability of the Federal Reserve to help the economy out of recession and depressions. Furthermore, a gold-backed currency could not expand fast enough to maintain a healthy rate of international trade and economic growth. Finally, returning to a gold standard would be a large waste of time, money, and resources. This graph shows how the value of $1,000 in gold ounce has slowly decreased in value since around 1938, which is around the Great Depression. This is caused by the Great Depression and the outlaw of paper money being backed by gold. This graph shows how a sharp incline in gold reserves occurred when the outlaw of gold took place in the mid-30s. It also shows a sharp decline in the gold reserves around 1945 to 1950 when they went back on the gold standard. It slowly goes up towards the 60s and 70s when Nixon got rid of the gold standard finally. This graph shows how inconsistent inflation for goods has been that were sold during the gold standard from around 1919 to about 1935.
We think that the gold standard is very problematic because it does not allow for expansion in the economy. However, it was a much-needed learning experience, so we will not make the same mistake again. The only good outcome of the gold standard we noticed was that international trading was easier when everyone used it. We don't think that America will ever return to the gold standard because of how difficult it is to operate on it within its own borders.